Good afternoon, everybody. My name is Peter Mills, and I'm the CEO at Wyse Meter Solutions. I'm pretty excited, actually, to be presenting some real-life data on how utilities have been affected and utility usage has been affected by the COVID pandemic over the last year. It's been a very challenging time for everybody, certainly across Canada and around the world. Part of our job is to take some of the data that we're able to collect in terms of resident utility usage and really try and present that information in a usable and insightful way such that you can better manage your buildings in the future. So today we'll be presenting insights into resident utility usage and the future of your buildings beyond COVID-19. Next slide, please. So in terms of what we'd like to cover today, there'll be a number of items. The first is what are we looking at and who we are and how did we get here today in terms of submetering both in the province of Ontario and across Canada. The next area that we're going to cover off is the importance of measuring what matters. So what are the basics of utility management and utility submetering, and why is it important to measure utility usage at a granular level? We're then going to cover off how we got here and what we've learned in the last year about utility usage and some of the historical rates and information that's occurred over the last decade or so and how we got here today. We're then going to be presenting some really deep analysis on real-world utility consumption data during the pandemic and how residents' utility consumption has changed quite dramatically during that time period. We will then go on to further explain what does this mean to you as a building owner, what were the impacts of this over the last year, and what are the things that you can do to prepare your building to be more efficient and meet the demands of utility consumption for tomorrow's residents as they continue to move into your properties. Next slide. So a little bit of background. Wyse is a leading provider of innovative submetering and utility expense management solutions across Canada. We are backed by Onyx through its mid-market platform OnCap. Onyx currently has about $39 billion under asset, and we brought OnCap in as a partner about 2.5 years ago to allow us to continue our substantial growth. And really our passion day to day lies in delivering technology to solve large unsettled environmental problems that at the end of the day benefit not only residents and building owners, but a society as a whole. Specifically, we focus in on submetering of various utilities, including electricity, water, thermal, and gas. And then also combine that with new solutions around EV charging and billing for EV charging, as well as our utility expense management platform, Synergy. We operate in the multi-residential rental market, student housing, affordable housing, condominium, both in new construction and retrofit and commercial. We've had explosive growth over the last number of years, and we continue to see that growth. We just eclipsed the 200,000 suite mark under contract, which was a big milestone for our organization. We currently process over 84,000 units on our Synergy platform. Last year, residents, because of their change in behavior when they become a bill payer, actually reduced their energy consumption, resulting in over 10 billion grams of reduction in greenhouse gas emissions. And we operate with 200 of Canada's top real estate companies. Next slide. So what are we looking at? This scene here was actually a picture I took in in 2019 before the pandemic. It's a adolescent bald eagle, and it reminds me of the importance of why we do what we do at Wyse every day, that it is our next generation of both the environment and our society as a whole that we're here to protect. And sub-metering allows us to really generate significant efficiencies in terms of building operations and give everybody the power to conserve, so that we all are mindful about the impact we can have on our environment every day. Next slide, please. So the next section, we're going to review measuring what matters. Next slide, please. So I want to just compare in this particular configuration two different buildings. So the building on the left is a building that is bulk metered, where no suites are actually individually metered at all for their energy or water consumption. And these suites can continue to use electricity and water. They're never informed of how much they're using. All of the utility consumption is included in their monthly rent payment. And without any information on a monthly basis, they really have no idea how much water or electricity they're using, and therefore they don't have really any ability or incentive to conserve. Certainly building owners know how much is being used within their building, but without sub-metering, the granularity you need to enhance the performance of your building isn't there. The model on the right shows sub-meters installed in all of the individual suites. And these additional meter points allow for a number of things. One, certainly any new residents moving into the building would be responsible now for their individual energy and water consumption. But it also gives much deeper insight to the building owner in terms of who is using what energy and water in the building, and whether or not they're a bill payer. Are there things that they can do to help curb consumption in the future? Next slide. A little bit of a market overview. Sub-metering really started to get a groundswell in probably early 2002, which I know seems like a long time ago, but it was when the province was looking at phasing in smart meters across Ontario. And at that time, sub-metering became a component of that smart meter deployment. In 2009, sub-metering picked up even more speed as energy costs started to rise and society became even more aware about the environmental impact resulting from sub-metering and the importance of conservation. Fast forward to 2021, sub-metering has really evolved into an all-utility strategy where building owners are looking to sub-meter for all their utilities and give their residents the power to conserve by managing their own electricity, water, and thermal energy use. Sub-metering companies, really want to address this responsibility through three main pillars. Obviously, one is the economic, helping business owners control their costs and their net operating income. However, the environmental impact that consumers have when they're able to monitor and reduce their own utility uses is becoming more and more important. And certainly we're seeing a social change where society and individuals want information about their usage and they have a desire to conserve, so we need to give them the tools to do that. Generally, right now, there's been a pretty significant increase in market penetration for sub-metering across Canada. In 2009, there was probably about 10% of the stock had been retrofitted. That's increased to about 40% in 2019. There's still over 1.6 million units that are bulk metered in Canada. So there's still a lot of units that do not have suite metering installed, and it's something that is important to look at going forward. In Ontario, roughly about 236, although it's increasing each month, but around 236,000 suites are sub-metered, of which about 140,000 units are bill payers. Next slide. One of the biggest questions we get regarding measuring what matters and it is in the new construction side of the industry, and we're certainly seeing a fairly dramatic increase in new construction projects, both certainly in the rental sector and the condominium sector. So I wanted to give everybody an overview of what most building owners and developers are doing across the country as they're tapping into submetering as a way to mitigate risks and build a sustainable living environment for residents. So typically 100% of all new rental and condo projects are submetering for electricity. Much of this across Canada and certainly in Ontario, it's regulated that you must submeter for electricity in new construction multi-residential buildings. And so that's happening all the time. On new construction rental projects, about 90% of those new construction rental buildings are also including not only electricity, but water as well. And we've seen, and we'll see shortly, water prices have increased steadily in most jurisdictions across Canada and many municipalities throughout Ontario. And so this becomes an important factor for building owners to start measuring and billing for, certainly in new construction rental. In new construction rental, probably 75% of those new construction buildings are adding thermal metering, where we are now metering and billing for electricity, water, as well as the heating and cooling costs in suite. So really the resident becomes fully responsible for 100% of their in-suite utility costs. And it helps drive a very sustainable building, gives them control to manage their costs, at the same time optimizes the expense that the building owner has in terms of the overall utility consumption in the building. In terms of condominium projects, we're seeing probably 60% of them are using both electricity and water. 100% are using electricity, submetering as a solution, and probably about 40% of the new construction condos are also adding in thermal metering as a all utilities approach to their properties. And we'll continue to see more uptake on thermal metering as the years proceed. Next slide, please. So I wanted to also look at what matters for residents, and this was based on a survey done by Avis and Young. They looked at, and Informa looked at a tenant survey of roughly 20,000 tenants across the country, and they asked the residents, how would you like your utilities to be organized in the building? And over 60% of the respondents wanted to have individual unit measurement and only have to pay for what they use. And that's been a consistent trend we've seen in terms of residents wanting to be in control of their own costs, especially in, certainly in new buildings where there's more in-suite amenities like washing machines and dryers, as well as dishwashers. Residents don't want to have to pay for their wasteful neighbors. And so having a concise platform to put all utilities on one bill each month is certainly more and more attractive to residents, and we continue to see that going forward. Next slide. So now we're going to get into how did we get here in terms of utility costs. Next slide, please. So one of the areas that we looked at, we looked over, roughly over the last 10 years, and we compared rent increases in Ontario based on the guideline increases that were provided each year by the province, and compared that against the increases in cost of electricity. And as you can see here, I think probably the main theme that you want to pull out of this is electricity rates, one, increased at a much steeper rate over the last 10 years, certainly than rents did. The other component of the chart is that electricity rates were quite volatile. So you can see a fairly steady increase between 2010 and 2016. There was a very steep decline over the next 2 years. And then in 2019, rates again sort of skyrocketed again. But over that time period, electricity rates increased by about 86%. Comparatively, if you look at guideline increases to rents during that same time period, there was about a 22% increase in rents over that same 10-year period. So clearly, electricity prices and electricity rates are escalating at a much, much quicker pace than rents, and really eroding building owners' bottom line and eroding their net operating income. And this clearly, I think, will be a trend that we're going to see over the next 10 years as the the province looks to repay some of our major investments we've made in the past number of years with respect to sustainable energy generation in the province. Next slide, please. Similarly, this is a 10-year sort of history and a short future forecast for gas prices. Natural gas prices, again, have fluctuated quite wildly since 2009. We're currently in 2020 at a very sort of low price point. We've started to see increases in 2021 as we come out of the impact of the pandemic, and demand for gas starts to increase, and also the tightening of supply that happened in 2020 is starting to drive prices up. So again, very difficult to predict gas prices on a year-over-year basis, and submetering really equalizes sort of the yearly rate fluctuations completely. Next slide. Here's some background on water costs, and this is we use the City of Toronto to illustrate what happened with water and sewer rates over the last 10 years. This is a very similar price escalation that we've seen in most municipalities across Canada. So again, in nearly a doubling of water and sewer costs over the last 10 years, and again, we continue to see rate increases year over year, in the 5 to 8% range in many municipalities. A lot of the water and sewer treatment infrastructure in these municipalities is very old and needs significant upgrading. And so we'll continue to see a pretty steady increase in water and sewer costs in most municipalities moving forward. And again, it's becoming quite expensive. Water in many multi-residential buildings is now the #1 utility use cost within the building. Next slide, please. So what happened? So a little over a year ago, in January of 2020, we actually reported our first presumptive COVID-19 case in Ontario. And I don't think at the time any of us really understood or had forecasted what the impact of that first simple announcement would be. I know we were all, had a heightened awareness about what was going on in other countries. But again, I'm not sure we fully predicted what was going to be happening over the last year. Fast forward a couple of months, March 12th, quite quickly, governments around the world, and certainly here in Ontario, we had to react very quickly to a global pandemic. Ontario shut down all schools following the March break. And I think that was really one of the times that I can remember the province really and our lives changed quite dramatically in March of 2020. Then the following week, over the next number of days, the province had no option, and our premier of the province had to declare a state of emergency as cases started to explode, not only here, but in other jurisdictions across the world. Never did I ever think the Canada-US border would be closed, but it was, and I think that was another really big major milestone in terms of our anticipating what was going to happen as part of COVID. And then various orders continued in terms of closures of businesses province-wide for at least 2 weeks, and we've continued to see various levels of shutdown. And this now has become the new normal. Next slide, please. So just a little back history, and I'm sure everyone has seen plenty of graphs, but as you can see, in early February of 2020, very few cases, total case counts certainly ever recorded in the province or across Canada. And then fast forward into March and April of 2020, we started to get a number of cases being declared, and there was a fairly steady rise until last summer. It seemed to level off. Towards June, July, it leveled off for a couple of months, and I know they at that time sort of started to release some of the lockdown and restrictions over the summer in August. And then, as you can see, towards October and November, our cases dramatically increased and continued to increase up until current day in April of 2021. Next slide, please. So now I want to jump into, we've sort of set the background in terms of what's been happening with rates, what's been happening with submetering over the past number of years, what's been happening with COVID, which we're all quite familiar with, but wanted to take all of that information and really dive into what does that mean for buildings and residents and owners, and what's happened with utility consumption. So we did an extensive review of our meter data, and we're going to review the case study information now. Next slide, please. So the new normal, lots of stay-at-home orders. We're now under another stay-at-home order here in the province. Many businesses shutdowns. Many businesses may never reopen, which is an impact that we're all going to see at some point. Obviously, the biggest, from an individual resident standpoint, everything became from home. Live at home, work at home, play at home. There was very little travel, lots of restrictions to, stay at home while you can. And as a result of that, in-suite utilities use was rising quite dramatically. And we're going to dive into some of the information regarding that now. Next slide. So what did we look at? So what we wanted to look at specifically was in-suite behavior for residents who pay their utilities and for those residents that don't. And what does that mean to those residents who are obviously paying for their utilities and those that don't, and how does that impact building owners? We went back through over 5,000 suites of meter data that we looked at in terms of electricity use across 75 multi-residential buildings. And we looked at over 3,000 suites across 42 buildings in terms of metered in-suite water use. So we've got lots of in-suite meter data. And the nice thing about these two case studies on the electricity and water side, across all the buildings, there was a very even split between the number of suites in each building that had bill payers who were responsible for their own utility costs, and suites where they were non-bill payers that are sitting tenants that don't receive a bill, and those utility costs are included in their rent. We identified all of these buildings across Ontario. So it's a very diverse split, some large buildings in some large urban centers, smaller buildings in some of the outlying urban areas as well, and both electrically heated, some very efficient buildings, some less efficient buildings. So it was a very, very good cross-section of properties that we looked at. And then we compared two main periods of time. we compared the period of April 2019 to October 2019, which was the pre-COVID, fully pre-COVID, no implications that COVID was coming at all, fairly sort of what I would call normal operating procedures as our society was operating at the time. And then we looked at the period of April 2020 to October 2020, where COVID was extremely active, lots of shutdowns, lockdowns, and then some easing of restrictions. And those were the two main periods of time that we looked at to compare how the behavior of residents and the impact on utilities during those two sets of time periods. And then the numbers were basically built around the fact that we have buildings with meters installed and recording consumption in all of these buildings. And obviously, for the units that we're billing, we have meters that are recording their consumption. We also have meters installed in the buildings where residents are not paying for their consumption, but we continue to track their consumption information. And so we're quite unique as a submetering, and just like every other submetering company, we're in a unique position to be able to look at that data and share our data because we're able to retrofit and operate in rental apartment buildings. Next slide, please. So the questions we wanted to answer were, how much did COVID-19 impact resident utility usage? What was the real impact for that utility consumption? Was there a difference in that usage between residents who pay and for residents that are not receiving a bill? So comparatively between the two, was there any difference? And then how did building owners fare who mitigated their financial risk by having submetering in place, and what was the financial impact to them through a mitigated program of submetering? Next slide, please. So this is the first sort of baseline data that we looked at. We looked at 75 properties, and this really represented the total kilowatt hour energy consumption on average across the buildings. And the dark blue bars represent the consumption pre-COVID. And the orange bars represent the building consumption post-COVID. And so you can see a very, very clear increase in total building consumption. Say if you look at the April time period from 2019 to April 2020, those two bars, it's about a 45% increase in April that COVID had an impact on in terms of building consumption, which is very dramatic. Obviously, there was a stay-at-home order. Everybody converted to hunker down at home. There was no travel, and everybody was residing in their homes and not moving. And so that's the initial impact, the 45% increase in energy consumption at the buildings. And then as we move forward over the next few months, you can see again, a fairly steady increased differential between May and June of 2019 versus May and June of 2020. And again, in those months, roughly about a 25 and 32% increase in total building consumption, respectively, during those 2 months. That trend continued even into July, where we saw about a 22% increase in energy consumption in those buildings. And then interestingly, sort of the back three sets of bars on this chart, in August of 2020, the lockdown started to get eased. There was a sense of some normalcy being returned to our society. Stores were open, restaurants were open, people were able to travel a little more freely. And we saw the incremental change in total building consumption start to drop. So in August 2019 versus August 2020, there was about a 20% differential. And then you can see quite clearly in September and October, when the restrictions were lifted and we were moving a little bit more freely and returning to a bit of normalcy for a short period of time, there was very little difference between the periods pre-COVID and during COVID in 2020. So it's just some baseline data to show you the impact on building energy consumption, and building owners faced tremendous cost increases during this time period. Those are some very significant increases, and the good news is, hopefully in the not too distant future, some of this is going to return to pre-COVID levels, but I'm not 100% sure at this point that we will fully return to normal levels. Next slide, please. Next, we wanted to dive into the in-suite consumption for non-bill payers. So what were bill payers using before COVID? So again, the dark blue lines were data pulled together during 2019 on the 5,000 suites that we looked at, and the orange bar represents the in-suite consumption during COVID. So again, very clear in April, a very significant spike, roughly about 45% in line with the total building consumption. So non-bill payers staying at home really started to use more electricity and quite intensely. And that trend continued all the way through again until, certainly into July. We had 24 and 35% increases in May and June. July, roughly about 18%. And then August, we start to see a slight decline in terms of the overall in-suite consumption for non-bill payers. Interestingly enough, if you look at the July period on this particular graph, non-bill payers are using 500 kilowatt hours a month of electricity in July of 2019, and 600 kilowatt hours of consumption in 2020. These are really high monthly use numbers, certainly very high comparatively to non-bill payers. And then again, we see an easing of the differential in September and October as the pandemic restrictions were being lifted, and people were able to get back to work, and we started to see some normalcy return in terms of the in-suite consumption for bill payers. Again, in-suite consumption was still quite high, roughly around 300 kilowatt hours at the lowest point for in-suite consumption in October of 2020. Next slide, please. And then the other thing that we wanted to compare is what happened with with bill payers during the same time period. So again, the blue bars represented consumption for bill payers during the 2019 time period, and then the orange bars represented consumption for bill payers during the pandemic. And again, early on, a pretty significant spike, about a 46% increase in April for bill payers as they were all ordered home, and those increases continued again through May, June, and July, and once again, once the restrictions were eased in late August, September, and October, we started to see again some return to comparative numbers for bill payers. I guess one of the areas I wanted to highlight here was, if you look at the peak energy consumption in July for bill payers in 2019 was 400 kilowatt hours, and for July 2020 about 500 kilowatt hours. So still very much quite a bit lower than what non-bill payers were using. But I think generally the trend in terms of percent change between non-bill payers and bill payers was pretty consistent. The bill payers, of course, were starting from a lower base consumption because they receive a bill and they use less to start with. Next slide, please. And that really this chart just tells you the story between bill payers and non-bill payers, and what the percent change was in terms of their electricity consumption. So the bill payers is the dark solid orange line. And you can see there in April of 2020 that their consumption, obviously spiked up and was both non-bill payers and bill payers were using about 45% more. Very interesting to see that the percent change between bill payers and non-bill payers was very consistent during the entire 7-month period that we looked at. But again, the non-bill payers were starting at a higher base consumption amount. So the real dollars impact was pretty dramatic with the non-bill payers. Next slide, please. So what does this mean for financial impact to building owners? And some of these numbers are frankly quite astounding. If you look at the pre-COVID levels in April of 2019 versus the period of April 2020, non-bill payers increased their energy consumption by $15 per suite per month, and it's a pretty dramatic, almost a 50% increase in terms of the dollars. And the unfortunate part of this is all of these non-bill payers, their electricity consumption is being paid for by the building owner. So the building owner is facing these dramatic increases in utility costs and really have no way to recapture it or pass through any of these costs. And obviously, to make things worse, in the province of Ontario, there's been very strict reductions in terms of guideline rent increases. So the ability to recapture these utility costs on a go-forward basis is becoming even more challenging to try and get additional rent increases. So throughout the pandemic, we saw fairly continuous larger increases in terms of in-suite electricity costs by non-bill payers. They weren't receiving a bill. They really didn't know how much they were using, but they were also being asked to stay at home. And as a result of that, their in-suite utility costs continued to rise. You can see in June and July, July peaked at almost $80 per suite per month in terms of in-suite electricity costs, which is a really dramatic number for building owners to have to face. And then, as again, we can see in September and October, as the restrictions eased, again, seem to equalize between pre-COVID and COVID levels during the time period that we were studying. Overall, I would say the average impact is roughly about $12 per suite per month in terms of overall financial impact to building owners because of COVID and the stay-at-home orders. And it's a pretty significant, when you look at larger portfolios or even smaller buildings, these are serious financial impacts that are challenging for building owners. Next slide, please. So the other interesting part of the utility data that we looked at was water, and I want to just go through the impact COVID had on water consumption, which I think was a little bit different than what we would have seen in the electricity consumption. Next slide, please. So this is the total building use in the 42 buildings that we looked at. Again, fairly consistent numbers. The April time period in 2019 to April 2020 represented about an 18% increase in building water consumption during those comparative monthly time periods. And that was very consistent throughout the entire time period. So whether or not there was restrictions being eased or lockdowns ending, water consumption across the board in all the buildings continued to be much, much higher during the COVID time period versus pre-COVID. Unexpectedly, I think water continued to be a very heavy user of overall building costs during post-COVID or during the COVID time period. The lowest period of increase was really in September. It was about 10 or 11%, but other than that, the year-over-year comparative water consumption increase was quite high and quite consistent across all 42 buildings. Next slide, please. Now we did the same analysis and we looked at water consumption for non-bill payers. So we have meters installed, we're monitoring every suite in a building. Those that are bill payers are receiving a bill, and then there's obviously sets of residents that are non-bill payers, but we still have access to their consumption information. Again, very consistent increases here, ranging anywhere from sort of 16% increases initially to as high as a 25% increase in water use in July. But again, we saw continuous, consistent increases in in-suite water use from non-bill payers. So very, very, a 25% increase was a very substantial amount. And all of that increase was being borne by the building owner. So none of these increases were being passed on to these residents as they're set up as non-bill payers with water included in their leases. Next slide, please. And here was probably one of the biggest, I wouldn't say surprises, but interesting components of the study. So water consumption for bill payers was significantly dampened because they received a bill each month. So non-bill payers were consistently using, 16 to 25% more water each month during COVID than pre-COVID. However, bill payers who are receiving a bill each month, they understand what their costs are. Their water increase amounts were significantly lower. So the highest was in April. It was about a 14% increase. Most of the months after that was about a 5 or 6% increase year over year comparatively for bill payers, and shrunk as low as 2 and 3% in September and October. So really drives home the fact that bill payers are much, much more responsible for their water consumption, and really shows the importance of making sure that they are receiving a bill and understand what the costs are and give them that ability to manage their costs accordingly. And if you give them the tools, they will change their behavior and they will manage their costs extremely well. And so it's quite a success story, I think, to show that residents, do care and they have the capability to make some behavior changes. And we saw that very clearly in terms of water use consumption for bill payers. Next slide, please. And again, here you can see quite a dramatic difference between the bill payers and non-bill payers for water consumption. So the upper line is the non-bill payers. Again, upwards of 25, almost 30% increases between pre-COVID and during COVID. Pretty dramatic water increase for non-bill payers. However, bill payers much, much better at controlling their water costs and their water consumption. Had a slight increase in April, but did a much, much better job May, June, July, August, and even started to see further dips in terms of differential between year-over-year changes. So the bill payers for that were receiving a bill for water did a much, much better job at controlling their costs and managing their bills each and every month. So happy to report that the residents again had the power put in their hands and were able to make some changes which they benefited from. Next slide, please. So how does that translate into dollars? So we looked at previously the water increases year over year for non-bill payers, and in this particular case, we translated that into dollars. So you can see here in April, May, June, July, like very consistent increases in terms of dollar use month over month, ranging anywhere from sort of $12 to $18 per month per suite in terms of an increase as an impact of COVID. And 100% of that increase cost was borne by the building owner. So a pretty dramatic cost increase. I'd say on average, during that time period, building owners faced about a $16 per suite per month increase in water costs for non-bill payers. So again, a cost that's not in their control, yet their residents are using the water consumption, and the residents didn't have the tools to make any real significant changes to their consumption. So something to keep in mind in terms of the financial impact that water use has on buildings is pretty dramatic, and was in fact more dramatic than the electricity use. Next slide, please. So then we wanted to look at, what's the result of this. We looked at an additional case study of about 38 different properties that had implemented water submetering during suite renovation. So even older stock buildings that typically have never been able to be metered for water were now able to meter those suites on turnover. And we went through and picked off sort of the top 10 buildings, and here's the resulting savings that they're generating. So because water use, about 90% of the water use in a building is typically in suite. When you start metering for water for the in-suite consumption, you're able to pass through those costs directly to the residents. And we looked at the top 10 buildings out of 38, and you can see here, ranges anywhere between sort of $650 and $1,100 per suite in savings per year for those buildings that were able to have water submetering in place. Many of these sites were completed before COVID, so the impact that COVID had on water consumption was fully negated, and the residents were able to, modify their behavior and change their monthly costs. So the building owner was not impacted at all. Obviously, suites that are not metered and not billed, 100% of the impact is borne by the building owner. But this was a good success story, and really shows the dollar value per suite that can be generated by a good water submetering program. Next slide, please. So some of our conclusions really are on the electricity side. We were happy to report that our findings really fully aligned with the IESO, which is the Independent Electricity System Operator here in the province that manages our distribution and transmission and generation requirements across the province. They're an excellent organization, and we really, our results on the electricity side matched what the IESO saw, which was about a 19% increase that they saw over pre-pandemic levels. We saw an immediate 45% increase in the very beginning of the pandemic in terms of electricity consumption by all consumers, and that followed with a pretty steady decline until September, when we started to see some increases again. And I guess one of the other sort of key findings was that very little behavioral differences on electricity use between bill payers and non-bill payers. So they did increase their consumption, but they increased at about the same rate month over month. And so a little surprising, but more analysis may need to be done to find out why that occurred. But again, non-bill payers, 100% of that consumption was being borne by the building owner, and submetering obviously eliminated that impact when residents are paying for their own consumption. Our conclusions on water were a little bit different. Consumption was certainly up in both bill payers and non-bill payers, but unlike electricity, increases in water consumption remained very steady throughout the entire study period. So there weren't any major sort of fluctuations up and down. Water consumption was very consistent. And unlike electricity, non-bill payers were using appreciatively quite a bit more water than bill payers. So obviously bill payers receiving a bill, understanding what their costs were much, much better able to manage their costs. Again, we saw some immediate jumps in water use year over year, where bill payer usage remained about 10%, non-bill payers climbed by about 23%. And so there was a big difference in terms of water use consumption by bill payers and non-bill payers, and that was a substantial part of our findings. And I guess the other, sort of clear indication is buildings owners that had submetered their units for electricity and water certainly had full mitigation in place in terms of the financial risks for those units that were bill payers and the units that are non-bill payers. There was pretty substantial risks and costs involved as the impact of the pandemic happened and continues to happen. And really those are some dramatic numbers that we need to make sure we all keep top of mind as we continue to roll out more efficient buildings in the future. Next slide, please. So what does this mean for everybody? Next slide. So we wanted to think about, what does your future resident profile mean? Work from home is probably here to stay in some form or another. I'm a bit of an optimist in terms of the snapback effect after vaccines are fully implemented, that hopefully there'll be a very dramatic return to working at the office. And however, there will be for sure some residual impact of residents staying at home to work. And that is going to be an important component as building owners look at their cash flow projections and impacts of utility use in their buildings over the next number of years. And it's something they're going to have to keep in mind. Obviously, increased personal hygiene and laundry use, washing your hands, all of that impacts water use. So again, that's going to be something to monitor and sort of take into account as you're managing your properties. And obviously an increased reliance on broadband and internet will impact electricity use within the buildings. Interestingly enough, here's a little stat: worldwide internet use increased by 40% during the pandemic. So clearly a massive demand and strain on our internet infrastructure. Frankly, in Canada, I think our internet providers did a tremendous job in terms of maintaining our level of connectivity during that time period, but those kinds of increases are very difficult to manage and obviously have a cost impact both to residents, building owners, and internet providers. Next slide, please. The other sort of major trend we've all seen is the future resident profile. So, not necessarily wanting to live in smaller spaces, needing more space. So looking for larger suites or larger living areas. In 2020, we saw a 37% drop in smaller condo unit sales. So really highlighting the fact that people wanted more space. They're living at home, they needed to get out, and they're looking for more space. So obviously an impact in terms of major urban centers like Toronto, downtown, people moving out to more suburban areas early in the pandemic was a really major trend starting to see some of that reversing now, which is a positive sign. Next slide. So this is something that Canada needs to start to prepare for now, and there will be a very large surge in terms of demand for housing and certainly rental suites over the next number of years. The federal government is predicting and trying to push towards having a level of immigration at about 400,000 per year for each of the next 3 years. So, you know, net immigration of 1.2 million new Canadians over the next 3 years. So that is going to put an enormous strain on rental properties and housing for our new Canadians who we welcome. And but at the same time, there is going to be a very significant drive for sustainable living and investment in sustainable technology and activities. So as a result of that, one of the items we're seeing is an increase in ESG reporting and GRESB, which is a new sort of more newer international standard for reporting environmental, social and governance reporting. Saw a 22% increase in reporting participation in 2020, and we're going to continue to see that grow very quickly. Next slide, please. And so in terms of recommendations, so risk you need to remove from your books. Utilities rates are going to continue to rise. Utility consumption will continue to rise, and so you need to remove that risk from your books. The foundation of demand side management could never be more important, and one of the foundations is if you don't measure it, you can't mitigate it. And obviously putting that measurement piece in place is very important. Continue to look for ways to reduce your in-suite demand and better optimizing the equipment use in your buildings, and put the responsibility back into the hands of the users. Clearly, they're able to make changes and do things to use energy and water more efficiently, and why not give them that power? Obviously, rents in 2021 in Ontario were capped at a 0% increase, so that's really hindered the ability to recover some of these costs. So again, being able to measure it and bill for consumption is an important aspect of mitigating risk. We're hoping that 2021 is going to be a better year, but it's still going to be a challenge from a financial standpoint for building owners to manage their utility costs. So submetering will continue to be an important mitigation program for them now and in the future. Next slide, please. And I just wanted to say thank you very much to Springfest, and I'm certainly available now to answer any questions you may have. I understand there's a chat room, so I will be there for a number of minutes to take any questions you may have, and look forward to seeing you in person in the near future. Bye for now.